Hello, Oracles. Well, today did not seem like it was a great day. We ran up green very early and then just trailed off as the day went on, hearing news from Jerome Powell pretty much confirming that we are going to be getting a 50 basis point hike when we get the next FOMC meeting on May 5th. However, I use today as a great day of opportunities. I made a lot of moves today in my portfolio. So knowing and understanding that we're going to be in quite a roller coaster ride over the course of the year, where dollar cost averaging is going to be the best way to play your strategies for the year and to grow your portfolio long term, I also realized that I can make some profits along the way, and there are some stocks I do want to clear out of so that, I can really consolidate down to the top really 5 stocks that I want to be in. So some of the moves that I ended up making today, where I put stops in for Apple and ENPH. So ENPH, I ended up getting stopped out at about $172, which for me worked out great because we closed at around $156. So I made some really nice profits there, and then was able to distribute a little bit of that money across a lot of my other stocks. What my strategy is going to be is I'm going to be looking to lower the cost basis for a lot of the stocks that I like long term. And so my strategy for this is twofold. One, if we end up getting the run like we did back in Q1, I will be able to, sell out of these stocks with a profit and then use that money to buy something else or invest more into my higher conviction plays. And if we don't end up running, that's fine because it's a win-win situation either way. So I'm going to be lowering my cost basis, bringing it down so when we do come back, I can make more profits on it because I do like them long term. So what I ended up doing today is I bought a lot of different stocks today. So I added a lot to, Square, SOFI, AMD, Google, nvda, Tesla, of course, NEO I added to. So a lot of these stocks I added to, filled out a position in a few of them, added more, but I lowered my cost basis significantly. Now, I didn't buy a lot, and I made a lot of money with ENPH, but I spent very little of it going back into stocks. I'm still sitting around 9% cash now, which is nice because with the volatility we're going through with the FOMC meeting coming up, potentially more 50 basis point rate hikes in the future, which Jerome Powell had said, we still have CPI data to go through. We've got Russia Day coming. We don't know what's going on with Putin there. Still a lot of uncertainty in the market, so I am still anticipating that secondary pullback. Now I have a lot of cash on hand to be able to take advantage of that opportunity if it arises. And so, yes, I love ENPH long term. I do. It's a great company. But because of the market we're in, I have a feeling I will get another great buying opportunity somewhere else over the course of this year to be able to get back in. So now I am primed and ready to be agile with my portfolio and cash so I can add to a lot of other stocks and then look at some other stocks that I don't own that maybe are very beaten down and at very low prices that I can make some good profits on. Now, I am not much of a swing trader, but one of the things I do like to do is just monitor some stocks that are really beat down to make maybe a quick profit, maybe a quick 5 or 10%. The way this market is moving now, making a 5 or 10% gain is relatively easy. Just waiting for the stocks to be really beat down, buying in, and they swing back up. Heck, ENPH alone has gone from 120 up to 210 down to 170. It's all over the place. So being able to jump in and out of these stocks, even factoring in having to pay those capital gains taxes, it can actually be profitable. Now, a strategy that I actually play for myself because I am a smaller portfolio. Now, those of you out there, I know some have larger portfolios. I'm still small, so I'm at a point where I might not even hit a $600 gain, and not hitting $600 means that I really don't even have to claim that on my taxes. So, it's a little game that I'm playing for myself. So if you're a little guy out there dealing with smaller dollar amounts, if you don't hit $600, now check with your CPA or an accountant just to verify that that is true for you. But, not hitting that amount, you don't really have to claim it. So it's also easier to offset that. So if I take some losses, I offset it not a big deal. And so of course I added to all those over the course of the day. Tesla, I wasn't actually anticipating adding to Tesla today. It was running so nice early on. I thought for sure we were going to close near $1,100. And I think if Jerome Powell didn't come out and say what he did, we probably would have closed up near $1,100. So yes, it was disappointing that we fell back, but the two great signs we got from this are, one, it did run. And we know fundamentally the company is even stronger now than it has ever been. And two, we got a great buying opportunity. I mean, heck, the thing was almost $1,100 and then it dipped below $1,000, so I bought a little bit at $998. I mean, this is phenomenal. So even if we do pull back a little bit more, it's just a great opportunity to buy even more. We'll go more into Tesla in the morning. There was a lot of analyst upgrades, some news from Elon that I wanted to share as well. So I'll dive into that in the morning. But just being able to buy more Tesla under $1,000 after the earnings that they just hit, amazing opportunity. Now, realistically in the market, I think we are still going to see probably some sideways, maybe downward trading. We have big earnings coming up over the next couple of weeks. And if again, we relate anything to Q1 was basically running down and then we were kind of up and down sideways through earnings because we got some good news. Netflix kicked it off and we went down. Then we had some other big techs that made it go back up. So if we follow that same pattern that we had in Q1, we'll probably have some up and down days and sideways for the next week. Then we're going to get the FOMC meeting. And that's where I'm unsure because now we're basically anticipating a 50 basis point rate hike. We got the 25 basis point rate hike in March and then the stocks went up afterwards. But with this 50 basis point hike, we then have the CPI data coming out a week after that. And with that CPI data, we might see, another 50 basis point hike coming in June. So for me, I feel uncertainty. So I'm going to monitor the market to see what the sentiment is like in the market to see if they have uncertainty. Because as we talk about all the time, the one thing the market dislikes the most is uncertainty. So if we get to that point where we get CPI and then the market's really not sure what the Fed is going to do at the June FOMC meeting, we might get a bit more selling off until June. So just a few pieces to pay attention to for the next couple of weeks to really feel out, whether we're going to get some greater buying opportunities or if we're going to just be, kind of sitting sideways for a little while. And so for me, my strategy is going to be basically what I have been doing all year long, selling out of things I have profitability in to free up cash to take advantage of further dips that we are going to get. Again, we still have so much uncertainty realistically for the rest of the year. Interest rates are still going up. We still don't have inflation in line. Ukraine and Russia are still at war. Supply chain issues are still a major issue. We still have COVID going on in China. This is not an environment where we are going to see a bull run in any sort of long-term situation. We are going to get pullbacks. We are in one right now. So this is where I'm just keeping my strategy of selling out of anything I can to make profits on to free up cash, and then having that cash on the side to take advantage of the dips that we get. And now I have had a request to go over maybe once a month sharing, what my income is from all of the different revenue streams that I have and where I put my investments. And honestly, I think it's a great idea. It's something for me. I do track all of my expenses and income, but I've never actually broken it down specifically by here's my income and here's how much of a percentage I have invested that in all of my different areas and what percentage goes to different places. So I'm going to do that. I'm going to actually put all of that together, and once a month I will share all of that with you guys just so you can see my progress and what my strategy is. Now again, this is not financial advice. Everybody has their own individual situations that they are working on, but at least I can show you guys where I'm at, and maybe you can see what I'm doing and then make a decision for your own situation that could perhaps help you out. Let me know in the comments below. Did you guys use today as an opportunity to maybe sell out of some stocks, maybe buy into others? I mean, we did have quite a run in the morning and then quite a sell-off in the afternoon. So for me, I used it. Let me know in the comments if you guys utilize that, or if you're just waiting and riding out Tesla as long as you can. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.